In this video today, let's talk about finding institutional supply and demand zones. How hard is it to actually identify or locate them on the chart? We're going to talk about that in some detail today because in reality, it's not complex. If you notice the market moving in the waves of how it moves, okay, making highs and higher lows, or when it's pushing to the downside and it's making lows and making lower highs and then more lower lows, you've got to figure out which way the market is moving first. The ultimate sign is the market breaking structure to the upside or to the downside? A breaking structure, or BOS, is one of the most important concepts surrounding supply and demand. I'll say that right now. When it comes to identifying those zones, you want to first and foremost see if we have a swing and where the market is breaking above a most recent high that it made, meaning breaking structure either to the upside or to the downside, and how to identify if a zone is there, meaning something that is of high probability, is if the market is made lots of momentum push, okay? All right, maybe we got a lot of bullish activity to the upside, the market breaks structure, or we got bearish activity to the downside and the market is breaking structure. So basically, simply put, if we've got lots of green candles racing to the upside and then they take out and break structure, or take a high out and then break structure, leaving that area where all that momentum took place that caused that break of structure, that's how we're going to identify where the institutions, okay, where the banks are really making their moves at. It's not the retail traders, even though retailers, we do participate in the market moves, but we don't know where the institutions or banks are going to make their moves at. But we can see the footprint once they actually make them, okay? So I'm going to show you some examples today. When it comes to institutional supply and demand zones, what is it that we're really looking for? When I first started trading 15 years ago, my first 2 years, I struggled with actually trading because I did not understand the concept of market structure. Today I do. And then once I understood that, I was able to start, developing a strategy surrounding the outlining or the major concept of supply and demand. And that's what took my trading to the next level. Okay. But first and foremost, I had to figure out what I was doing wrong, and not being able to read the charts the correct way was my biggest hindrance. Okay. So I have my higher base chart here that I use. I trade on range charts, and we're just going to look at some examples of some aggressive areas of buying and selling where we see lots of momentum pushes to the upside or to the downside. And this is going to help us identify, again, where the institutions, where the banks are creating these zones at, right? So let's take a look right now. Now you see this bullish move to the upside, and then the market dips back where we start making these lower lows and lower highs. And then we have a high here and a low right here. This is a leg. And the market will either take out one end of the extremity at some point, either that high or that low. But let's say the market makes a move off of this low right here, and it starts to make higher highs and higher lows. We start breaking structure higher, both, as we're making highs, higher lows, and breaking higher. And we also are breaking structure to the left-hand side. Now, I tell people all the time, if you do not understand it or you have a hard time trading the in-between like a major high and a major low, then wait for the market to take out one of the extremes, either the major high or the major low. Now, the market can also, in between a leg, make additional swing highs and swing lows, okay? Meaning we have a major low here, right? But then it starts to make higher highs and higher lows, breaking structure higher, going up, and we're starting to take out structure to the left-hand side of the chart on this leg, or this leg to the downside. Then the market does what? It pushes up. All right, as you can see, we get a dip coming back to the downside. So it's made this high because the market moves in waves. Higher highs, higher lows. As it's moving to the upside, it comes down. It starts to take out, say, structure here, right here, coming to the downside. So we make a low right here. So now we're in between a high and a low, and another high and a low. Look, again, remember what I just said? Wait for the market to take out the, either one extreme or the other, a high or a low. Okay. In this case here, we are wedging, but we have one high, one low, another high, another low here. But when the market breaks structure to the upside, as you can see, and it takes out this high right here, it pulls back to this high probability demand zone. This is where the institutions or the banks really started making their move, was right here back to the upside, because they wanted to take out this high and start retesting and filling in some of these gaps over here to the left-hand side of the chart. But they took out this swing high right here, okay? So we got a pullback, a low made, higher highs and higher lows being broken or made to the upside, okay, meaning structure being broken. And we take and break above this high here, so we break structure to the upside. Nice swing to the upside. Now, what makes this a demand zone is where we have the final push before the break of structure right here. High, pulls back, aggressive buy-in. The banks and institutions are doing this. This is institutional play within the market right here. They break above this high right here, leaving all this green candle, green candle, green candle. These big green candles to the upside, as you can see here, are fully loaded with buy orders to push the market higher and break above this area of structure right there. Okay, so they're running, these orders right here where people were selling. So all these sellers right here got flushed out of the market when all this potential buy-in, aggressive buy-in started happening to the upside where they broke this area of structure going higher, leaving behind a high probability, demand zone. So this would be like a order block or institutional demand zone resting back here at this zone. Now, as retail traders, we can see the footprint now, okay? What we want to do is take a play off of what just took place with that aggressive push to the upside that took out that structure. We want to wait for the market to come back to it, right? Fill the gap right back here at the zone. Okay, it taps the zone. We mark it up. Fill the gap right back here at the zone, or the imbalance, I like to call it, right here at the zone. And once the market taps it and we get the rejection, then we can go long. Now, I have a certain strategy in how I trade. Marking up my higher base charts off of my first with the zones there, the supply or demand zones that way, and then I'll move down to my lower base chart to find a better suit or a more refined a zone to take a trade from. Okay, because when you start moving up to higher charts and taking trades off of like higher base charts, just exclusive, then you could incur some drawdown, because each one of these candles could represent a lot of points. Here on the 120 range, they represent 30 points a piece. Okay, so that's why I like the strategy and how I trade, which I have a private community, and I'm gonna talk more about that towards the end, because it's very, 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 very inexpensive for anyone who wants to join. It's like pennies on the dollar a day, but that's where the cornerstone, the blueprint to how I actually trade is actually discussed. Okay, and for all those out there that are part of that community, that have left testimonials on the Discord channel and are passing your evaluations and your challenges through those prop firms or trading with your own funds, I salute you guys and give you much kudos for putting in the work. And I want to thank you for supporting the channel as well in doing so, because you're supporting not only the channel, but you're supporting me as a content creator and as well as a trader. But I'm just providing you just educational or informational type video content surrounding how I personally trade. Okay, no guarantees are made there. It's just the fact is I share with you how I trade through that private community of additional video content, which I'll talk about here in a minute. Okay, I don't want to talk about that right now. All right, but stay tuned, because I'm going to run through that at the end of the video here. All right, so this is a lot of buying right here. This is the institutions, and for you as a trader to understand that this is where the institutions engaged at, probably some retail traders as well. We want to be part of that move when they come back. If there's an imbalance there, because there may be orders on the books that need to be filled, that they're going to fill when they come back to this area. Okay. And on their means, and what they'll do on the way back down is that they'll be looking to stop some traders out. Like those that bought right here, they'll be stopping them out as the market comes back down. Okay. So when the market comes back to this area, you would want to engage in the market, because that's your institutional demand zone right there. Now let's look at an example of an institutional supply zone right quick, and we'll go on from there. All right, so we see all this massive selling come to the downside right here. Okay, that's our final low before the market starts to do what? We got this void here from I believe it was Sunday night's opening into Monday's trading session, but we got a void or gap up makes highs, higher lows. So we're swinging higher, making the waves, as you can see, to the upside. And then we finally get a final ascent to the push to the upside, okay, making a high right here. The market starts to come down, all right? It starts to come down, making lows, lower highs, waving to the downside. You know, I'm not saying waving like this. I'm saying making wave movements, making lower lows and lower highs to the downside, breaking structure lower, but we're also taking out structure to the left-hand side of the chart as well. So we're breaking lows here, lows, lower highs, and breaking more lows below these lows as we come lower. So we're in between a high here and a low right here, okay? I believe it's the same high and low I just talked about, yes, okay? So once we start taking out lows to the left-hand side of the chart on our breaking structure, making lows, lower highs, you know, lower lows, lower highs, and lower lows, like right here, this is a supply zone. Why is an area of supply? Okay, it's an institutional zone there of supply because there's aggressive selling coming to the downside as the market shifts from bullish back to bearish. Understand that, okay? Now, you can notice that by what? All the aggressive red candles, the bearish candles, bearish, 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 red candles that close and break below this low here, breaking structure, coming lower. Understand? Now, when the market does that, all right, we're looking for a pullback to a key area to take a trade going back to the actual downside right here. Beautiful area to go short from. Why? Because we have an imbalance or a gap resting back at the zone. Okay, we have aggressive selling coming out of the zone to the downside, and we have the market is breaking structure lower below this low, okay, and it's also breaking other lows as it's coming down, okay? So we've got the market transitioning from bullish back to bearish, and there is your institutional supply zone right there. That's what you're looking for. You want to notice where you have the breaks and structures at on your chart, and the market is moving in a certain direction, either to the upside or the downside. You want to make sure where you are noticing where there is aggressive buying or aggressive selling with lots of momentum that takes the market even lower or higher, depending on which way it's moving, and breaking that area structure, meaning breaking below the last, most recent low or high. This is where the institutions made their move at. Okay, so as they go back up, what are they doing here? They're stopping some sellers out here. Okay. Right there, right here. And when they do so, they go back and they tap into the zone, and either you got shaken out of your trade if you were short right here, or you got stopped out, and then all of a sudden the market starts to move back in the same direction in which you were initially trying to go short, maybe up in here to go short, even though this is not a zone. This is the actual zone. But there were people who sold right here, and either they got stopped out or shaken out of their trade, and then the market goes in their intended original direction. Okay, that happens. That's why people get frustrated with trading who don't have a solid strategy to trade the correct way. I'm telling you, institutional supply and demand zone trading is highly effective. Okay, it's probably the best strategy out there if you understand the concept. All right, and I've been trading this for like 13 years now, and it works for me. I wouldn't trade anything other than this right here. Okay, 99% of the time, this is what I'm trading. All right, so that's how you look to identify or find those, those aggressive areas, those institutional zones, because this is where the banks are making their moves at, where there is lots of push and lots of momentum, where the market is breaking through, coming to the downside in the area structure with lots of green candles, or if it's going to the upside right here, lots of red candles, or if it's going to the upside right here, lots of green candles. That's how you can identify what the institutions are actually doing when they leave behind their footprint on the market, okay? I want to share that with you guys today. Now, it is not hard. It's very simple. Master the concept of market structure, okay? And just follow the waves, follow the flow of the market. And I tell people this all the time. Mark off your highs and lows, all right? It made on a move to the upside as it was waving a high here before breaking structure lower and coming down and making a low right here. This is your leg, okay? So either wait for it to take out the high or the low and to take out a leg, and then, identify what you're going to do next. Like when it broke this high right here, going to the upside, the market could have stopped right here. This would have been a zone right here, aggressive buying to the upside, institutional demand zone here, but That doesn't guarantee that market is going to hold right there when it comes back. They may want to blast right through that. It depends on if we got news, if they just decide they don't want to, stop at this area right here, but yet they want to come lower and start to do what? Grab some liquidity before they start making their move back to the upside like they did here. They came down, they took this out, they started filling in some additional areas coming to the downside. They stopped and said, okay, we're done. We're going back up now to take out structure right there. All right, take that high out right there. And that's what they did. So you have to understand the movement of the market and just kind of think more logical of what they're trying to do. All right. But that's all I had today, guys. That's all I wanted to talk about. Now, if you're interested in the cornerstone, the blueprint to how I trade, you may want to take interest in becoming either an elite or an ultra elite supporter of the channel. There's a link down in the description portion of the video. Okay. Scroll down. You'll see it. It's titled Ultra Elite Supporter. Once you click on that, there will be a few tiers that will pop up. Give it a second or two. You'll see them, and they'll be labeled to the left-hand side, either elite or ultra elite. Okay. Once you click on each one of those two tiers, it's going to lay out the perks and rewards that you receive for each tier. As an elite supporter, you receive all the trade breakdown videos where I walk you through setups that I've taken and posted over on Discord. And yes, there's a Discord if you're interested in joining. That link is down in the description portion of the video as well. I post my trades. I go back and break the videos down surrounding the trades, breaking down, just my mindset in regards to structure, price action, stop loss placement, profit target areas, things of that nature for each one of those trades, so that you can understand the purpose and the meaning or reason why I took those trades. So that when you're back testing and forward testing yourself, things make more sense when you're looking at the charts, when you're going back and testing yourself. Now, you also receive the video playlist and a great video surrounding market structure if you are struggling with that concept. Now, if you want to take it one step above that and become an ultra elite supporter, you receive everything that I just discussed, plus my live recorded trading sessions as well. All right. That's where I record my trading sessions. As I'm trading throughout the day, I'm talking to you through the videos as if you're sitting right next or in front of me, and you see me engage in the trades. I talk about the setups, talk about the trade themselves within the video as I'm trading during the actual session. I record that and then I post it for the that video for the Ultra Elite members. Okay, so the choice is yours. Again, it's very inexpensive. It's only pennies on the dollar a day. But again, the link is down in the description portion of the video. That's all I have. That is it. I'm about to jump off of here. If you haven't taken time to subscribe already, please do so by clicking the sub button down below. Click the bell to turn your post notifications on as soon as you do that. And last but not least, drop me a like if you found value in today's video. Take care. See everyone in the next one.